All right, everybody, welcome back to the Discounts Crypto Market Update. Today, we are going to be covering Bitcoin and Ethereum. Bitcoin, the OG stablecoin. We had called this long out from the low of this channel. We said, watch out for upside in this channel or watch out for a significant breakdown to the downside. You could have played it either way. Once it held strong here, we got long and we are up 20% on this position right now. We were expecting some consolidation here, but as you could see, it did not want to do that. Let's clean this up. It just absolutely broke out to the upside and found overhead resistance right here. Totally natural for them to find overhead resistance there. So let's clean this up. What are we expecting from here? Well, as you could see, into that overhead resistance, we're pulling back a little bit, and what we want to see here is them to hold this area strong right here. As you can see, we drew this trend line at about 28,200. I would not be surprised to see the market pull back into this level and hold it to consolidate for more upside. Now, this would be a pretty significant drop, mind you. We don't want to see it get down here, but if it did get down here, it would be totally normal for it to come back down, retest the breakout area before resuming uptrend. Now, the one thing that has me on my toes here is if the S&P 500 and the NASDAQ are going to start a new downtrend, if everything is going to be over, the recession worries, the banking crisis, if everything is going to rear its ugly head again, I don't know how Bitcoin is going to fare in that storm. However, I will tell you right now, we've been saying Bitcoin is lagging and watch out for that breakout. And that's where this was. I think almost everyone on the timeline on Twitter was getting bullish. And guess what? Everyone proved to be right. So you got to love this move on Bitcoin. So where do we go from here? Well, if this is going to continue, we are going to see this upside target at $35,000 get hit. And let me pull back into another chart to show you why that is such an important target. All right, here you can see the Bitcoin CME Futures chart. I love this chart for several reasons, and the main reason is it produces gaps. Bitcoin loves traditional technicals and it loves to fill gaps. Oh, what do I mean by it loves to fill gaps? Well, let's go back in recent history. We have a gap right here and we have a gap right here. Well, what did it do? When it broke out of this area and created this gap right here, it went and filled this gap to perfection. We were long buyers right here as well, filled this gap and went on that run that everyone knows all too well. What else did it do? Once it did that run up, right, it came up, filled this gap and this very important area of overhead resistance. And what did it do? It pulled back. It was a great short trade as well. So if we clean this up, what is Bitcoin going to do? Well, common sense technical analysis, guys. It is going to fill this futures gap, and I would not be surprised for it to go even higher, heading up to 40,000 on Bitcoin. Would not be surprised, but 35K is the ultimate upside target for this long trade. So let's zoom out here on the regular BTC USD chart. Again, let's see this thing hold up well. And I think that 35,000 is in the cards, no problem. You should have taken profits here. So this should be a risk-free, emotionless trade at this point. Don't let the trade go bad on you. We don't want to see this get back into the channel, period. And that's it on Bitcoin. Let's head on over to Ethereum. Okay, ETH is in a little bit different of a position, right? It's looking weak comparatively to Bitcoin. However, look how well we drew this trend line for our members. And look how well it bounced off that trend line. If you remember, we talked about this on Sunday. We said 1, 2, 3 on the fourth hit, you want to be cautious. But if it's going to hold, this thing is going to rip. Now, if we start to see strength in Bitcoin, this thing is lagging and this thing is going to explode. What do we want to see with ETH? Well, it broke out of this trend line as well. If it's going to come back down and consolidate a little bit, we want to see it hold strong and push up to that $2,000 level and 2,100 as well. It coincides with these trend lines. I didn't make these trend lines. The market made these trend lines. And they also coincide with great price targets. So 2,000 and 2,100 is our first upside target on ETH. We'll see some consolidation here and a break into this channel if we want to continue to the upside. 2,300 to 2,400 is in the cards, absolutely, on Ethereum. Now, what about even further upside targets? Let's say the NASDAQ, the S&P is just consolidating, no significant pullbacks, or let's say crypto is strong, right? It's been lagging this significant melt-up move in the S&P and the NASDAQ. Maybe it's time for crypto to shine and the NASDAQ and S&P 500 to pull back. Well, I would not be surprised to see the ultimate target on Ethereum get to 2,700. Where do I get 2,700 from? First, it's this trend line right here. Let's head on over to the Ethereum futures chart. Same thing as Bitcoin. It coincides with that $2,700 level on Ethereum. This gap should get filled if the markets want to continue to the upside. That's the ultimate upside target for this run that I have on Ethereum. As you can see, if we go back and pull back on the ETH USD chart, that gap coincides perfectly with this upsloping trend line right here, as well as that CME Futures gap, $2,700 on Ethereum. Book it if this is going to continue to the upside. Now, what about the downside scenario? What do we want to see if this is going to fail? Well, we certainly don't want to see it breach this low. Watch out for a tag of this trend line again. If it's going to hold and consolidate in this wedge, and Bitcoin is also holding up and the broader markets are also holding up, watch out for that upside 2,000, 2,100 near-term target for Ethereum. That's it for today, guys, on our Bitcoin and Ethereum update. If you have not yet, last Sunday, we posted a free macro newsletter. We taught you how to time market crashes and recessions using the inverted yield curve. We went back all the way to 1965. As you can see, look, we get an inverted yield curve, recession, inverted yield curve, recession, another recession, all the time like clockwork. You need to go check this out if you don't have this tool in your toolbox. It is 100% free. Head on over to the website and type your email in here. We are going to be covering the end of the US dollar in our next Sunday macro newsletter, so watch out for that. You will get notified if you're subscribed via email. We're going to cover the best assets to ride that trend of the end of the US dollar. Be sure to type in your email here. We also have a Telegram channel, completely free. We're calling out trades here. We had a 20% long trade on wheat, timed to perfection. We have investing ideas and day trading ideas for day traders. And as you can see, we called out that Bitcoin long to perfection. Come on over here, guys. It's completely free. You have nothing to lose. Have a great rest of your day, and we will see you on Sunday.